26 points. So big bang opening on the Lal Street.
Currently, the benchmark indices are up close to about 1%.
Markets are looking very strong. We have Nifty sitting with gains of 180 points.
Sharp fall actually. From at 228 or so, the market was at 17,483 and we're at 17,445 now. So that's a 40-point fall. 176 points on the Nifty. We're at 17,490.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Bulls continue to reclaim lost ground as strong global cues lift the Lal Street once again. Sensex gains over 500 points. The Nifty gains nearly 200 points. PSU Banks lead the charge. Invesco is not the largest shareholder in Z anymore. The US-based fund house sells 5.5% of its stake via block deals, mops up close to $170 million. Around 5 crore, 29 lakh shares change hands. The Z stock jumps 6%. TVS Motors powers up to a new 52-week high as brokerages turn bullish on its volume performance and its leadership in electric vehicles. PSU Bank index rallies 4% after brokerages bet big on Canara Bank, Bank of Baroda and Indian Bank say they are better placed as asset quality is healing and balance sheets are looking better. In stocks and news, WeMart gains after it buys Lime Road. Adani Transmission rallies after its second quarter operational update. Can Fin Homes also gains post a decent set in Q2. Okay, so those were all of the top stories that we're tracking this evening. Here's a lineup of what we have in store for you. It's a packed show as always. In Market Voices, we have Tushar Pradhan, CIO of HSBC Global AMC, talking about private banks and its valuations. And in big corporate voices this evening, we have Lalit Agarwal, who is the founder and MD of WeMart Retail, and Girish Kosugi, who is the MD and CEO of Can Fin Homes. All right, those were all of our top stories and what you'll get to see in the next 30-odd minutes. But let's start with the day's market action. The recovery continues on the Lal Street. Positive global cues boosted sentiment once again. Sensex gained over 500 points and the Nifty gained nearly 200 points. Mid-caps managed to outperform the blue chips. Nifty Bank gained nearly 400 points with the PSU Banks leading the charge. Prashant Nair is here with the details.
Strong session overall, nothing to complain after the strong handoff that we got from Wall Street. It's been very volatile. Global markets 2% up, 2% down. And then last night, of course, out of the US, you had another 2.5% higher move. But good close. The star of the session really was the PSU Bank Index, which now this week is up 8%. Names like PNB, SBI, Canara Bank, Indian Bank, you name it. That was really the flavor of today's session. But apart from PSU Banks, media as a space did well. Z, of course, is a big contributor. Real estate, which has been coming off last few sessions, picked up pace, and the consumer index did quite well. SBI, naturally, on the Nifty was the top gainer. There were Adani Ports, Eicher, Nestle, ITC. As I said, consumer has come back into flavor. Reliance participated as well, and I think that it was a big constituent, big help for the broader index. Broader markets, even better as compared to the Nifty. Defense as a space has been doing well. There's a Defense Expo which is going on as well. HAL, BHEL, data patterns, a few. TVS Motor did well. You had Polycab, Adani Wilmar, Adani Transmission. The recent listing, Electronic Smart, is at a new high. Gujarat Alkali, NHPC, Phoenix. I can go on, but just highlighting the big volume-led movers that we had. The Nifty has closed exactly at the 50-day moving average, the simple 50-day average, and I think that becomes the first stop, the first level to really conclusively take out when we return tomorrow. There is no important data out of the US which could kind of, throw a spoke in the wheel. So hopefully the market in the US may continue to do well, which provides additional tailwind to the market here, which in any case has been doing relatively better. And I think markets will also closely watch central bank action in the UK. Whether they, as the Financial Times reported during the Asia session today, whether they are actually postponing the quantitative tightening program, not just because it's important for UK, but as a cue of what may possibly happen around the world later this year. Back to you.
Okay, all right, Prashant. Thanks very much for that. Let's get you some expert opinion now. Tushar Pradhan, CIO at HSBC Global AMC, said that the earnings story in India is pretty solid. He added that private sector banks have done well due to technology and the ease of banking that they offer their customers.
Predicting pretty significant earnings growth for this quarter as well, and in fact for the full financial year. So I think the dark clouds that we have seen in the Western world and the markets as we speak have caused us to believe that earnings will not follow through. But I think the earnings story is pretty solid for this year. What brings to mind then is that will this be followed up for next year? And I think that is really where the confusion is. How long will the higher interest rates survive? Will it snuff out the capital expansion that we are talking about, which will happen? Or will the rates which have gone up in India not really be so substantial to be able to really snuff out the recovery that we are talking about for next year? The private sector banks have done well for the reasons that we all know, that they bring technology, they bring ease of banking, ease of business to customers. Customers tend to like that. The kind of expansion that they've seen both on the liability side as well as their ability to attract more customers is the testament for where their market valuation is going. The innovation by which they approach newer customers and the ease at which people can be lent to is something which a lot of the public sector banks need to catch up on. If any significant company turns around, invests dramatically in technology, matches step for step what the private banks have been able to offer its customers, I think you've got a gold mine.
Okay, let's get in some more opinion then. Matt Dorton, who is the chief market strategist at Carilion Tower Advisors, said that India and Latin America are good markets to invest in. He added that IT and financial stocks are outperforming in India.
The fundamentals are still, I think, in the favor of long-term upside for the overall market. The challenge is that the macro headwinds are just incredibly pervasive right now. Look for really, really compelling valuations. The small cap part of the US market, I think, makes a lot of sense. For global investors, I think emerging markets, which have sold off really hard, make a lot of sense. Focusing on India and Latin America, I still like both of those a lot moving forward. I think a lot of bad news is already in the price. When you look at, particularly in IT services, valuations have come off significantly over the past year. And what's encouraging from India is that you're seeing IT start to outperform. You're seeing financials and banks in particular outperform. So you're seeing those, I'll call it stocks that haven't been part of the momentum trade for a while, start to work again, which is really, really encouraging. I think banks have a lot of room to run. Net interest margins are more constructive, and at least the difference between loan growth and what they're paying out on deposits continues to increase. So I think that sets up for a really, really good backdrop for the banks.
All right, well, let's get to the second story this evening. Zee Entertainment ended the day close to 3% in the green after Invesco sold 5.5% stake of its over 10% stake in Zee via a block deal. A lock-in on further sales and optimism over the merger with Sony fueled a rally in the stock. Nimesh Shah is here with the details on this.
Zee is one of the big gainers in today's trade, and not surprising. The couple of reasons why the stock is window. So there was absolutely no slippage in the block. I still don't have the color on the book, which means there are not enough details on who the buyers are, and that will be the next important thing to watch out for. Maybe the disclosure will come today evening, so that's something to watch out. The other reason why the stock is doing well today is the fact that now there is 180 days of lockup for Invesco. See, Invesco was holding 10.5% and 1.5%, and they were sold 5.5%. So they left with 5%, but this 5% can only come now after 6 months. So there could be no further supply. And in the 6 months, there is a very high possibility that the new entity will get listed on the exchanges. Post that, any which ways the Invesco stake will further go down because the equity base is going up. So, there is now no further supply coming in from Invesco, at least for the next 6 months. And the fact that the block happened in the block window is leading to a big surge in Zee Entertainment today. As I said, the disclosure in terms of buyers will be important. I don't have a color yet, but the two big reasons why the stock is up today. One, it happened in a block window, the fact that now there is a lockup for 180 days for Invesco.
Okay, all right, Nimesh, thanks very much for getting us that big story. Well, let's move on to the third story that we're tracking then. TVS Motors powered up to a new 52-week high after it rallied 4% as brokerages turned bullish on the company's volume performance and its leadership in electric vehicles. Sonia Shenoy is here with the details on why the stock went up in today's trading session.
Well, thanks a lot for that. So TVS Motors hit a fresh high today. The stock, in fact, is the strongest auto stock. It's up 74% in 2022. While the Nifty Auto Index is up just about 14% this year. So there's a clear outperformance that we've seen. Now, TVS Motor is the only two-wheeler maker to substantially expand its presence in all high-growth categories over the past decade, and hence the outperformance in the stock. So we decided to do a deep dive and take a look at the market share gains that TVS has seen over the last 8 years in several categories. Let's start with the premium motorcycle segment, the 150 to 250cc segment. TVS Motors market share has risen from just 12.3% way back in FY15 all the way to almost 26% in FY22. Now, this market share gain in the premium motorcycle segment was led by a very strong performance by the Apache brand, and TVS last year also launched the Apache RTR 160, which has seen a great response. Let's move on now to the scooter segment, where they're not too far behind in terms of gains. Way back in FY15, they had just 15.2% market share, and now it's at 20% due to the success of two of their brands, the TVS Jupiter and the N-Torq. Of course, they've gained quite a bit of ground in the electric vehicle space and in the export market as well. So let's take a look at the export market motorcycle share. Now, that was just 13% of the industry exports came from TVS Motor way back in FY15. That has gone up all the way to 25.1%. And, that just goes to show that, the margins are higher in the export market, and hence realizations for TVS has picked up as well. And that has helped with the overall margin picture coming in at 9 to 10% plus. But how are the valuations stacked up, you would ask? It's not too expensive compared to its 5-year average. So TVS Motor currently trades at about 29.4 times FY24, and the last 5-year average is 28 times, and hence perhaps the stock is continues to gain ground. Back to you.
Okay, all right, Sonia, thanks very much for that. That's on TVS Motors. But let's shift focus to the mid-cap IT space. L&T Tech came out with its second quarter numbers and it beat expectations on all counts. Profits came in 3% higher at a little over 282 odd crores versus 274 crores in the previous quarter. Rupee revenue surged 6.5%, while the dollar revenue also came in 3.2% higher than the previous quarter. The company also declared a dividend of 15 rupees a share. All right, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories we're tracking this evening.
ये लो अब खाओ कद्दू इसके चक्कर में 2000 का चालान लग गया।
बाइक इंश्योरेंस रिन्यू करते तो नहीं लगता ना पापा।
इंश्योरेंस कितनी महंगी है पता है? मैं यहाँ पैसे बचाऊं, सस्ते कद्दू के चक्कर में 15 किलोमीटर दूर जाऊं।
2000 रुपए का सस्ता कद्दू।
बाइक इंश्योरेंस महंगी पड़ रही है। प्रीमियम स्टार्टिंग एट जस्ट ₹1.5 पर डे ऑन फोन पे। टेंशन फ्री इंश्योरेंस।
IXIGO दादा IXIGO नहीं इक्सिगो एक्सिगो नहीं इक्सिगो नाम में क्या लगा है बिड़ू सीधा बोल देने का इक्सिगो ट्रैवल ऐप डाउनलोड करो बिंदास टिकट बुक करो और निकल लो।
Tata Power powering green mobility through pan-India EV charging infra setup, and it is a network of 2,400 plus public and semi-public EV chargers with another 1,400 plus chargers in various stages of installation. Now, install 21,000 plus home chargers and 240 plus bus charging points across India. Tata Power has collaborated with multiple partners across industries to enable the transition to clean mobility. The company has kicked off an ambitious nationwide plan of setting up EV charging stations from north to south, connecting Kashmir to Kanyakumari, and from east to west from Guwahati to Dwarka and Bikaner over the next 3 to 5 years.
जब टीवी देख नहीं रही हो तो बंद कर दो ना।
आज पूरे दिन घर पे रहोगे?
हाँ।
तो अगर गाड़ी यूज नहीं कर रहे हो तो इंश्योरेंस बंद कर दो ना।
PolicyBazaar.com पर पे एज यू गो कार इंश्योरेंस। जब कार चले तो इंश्योरेंस ऑन रखो, वरना पॉज करो और 8,000 रुपए तक बचाओ।
Always the same problem. be so considering the prevailing cotton prices, but we don't get good prices at the time of harvesting.
Do negotiate the price of your crop from today only by hedging the exchange.
Can we, the small farmers, sell our commodity at exchange?
With the medium of FPO, you the farmers being united after making the cotton bale from raw cotton can give the delivery. One more thing, that exchange also reimburses the rent of warehouse, testing and so many other expenses.
It's really icing on the cake.
Let me introduce me. Here I come. Yeah. Here I go.
It's got noise canceling.
I'm gonna do what I do. Put it all together.
Just be you. Lenovo Yoga.
Do what I do.
Hey, keep my Milton.
पचास सालों से आपके लिए कुछ नया सोचते आ रहे हैं मिल्टन।
Welcome back. You're still tuned in to Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking. The fourth headline this evening, PSU Banks like Bank of Baroda, Indian Bank and Canara Bank all rallied over 4% after brokerages bet big on the public sector space. Abhishek Kothari is here with the details on why these stocks went up today. Abhishek.
Well, to begin with, Haitong Securities has written a note on PSU Banks saying that PSU Banks are now better placed with respect to asset quality, which is healing, and relatively better balance sheet. So they expect the stocks under coverage to report a CAGR in terms of loan growth over the next few years at 11.5% versus 11% loan growth that they had in FY22. So coverage ratios are higher, that is PCR, provision coverage ratio, anywhere in the range of 65% to 78%. This is without the technical write-off, and CRAR, that is capital adequacy ratio, is also strong, around 13.5 to 16.5% range. So improving growth trajectory and reducing credit costs would augur well for return ratios to improve ahead. So worst is behind with respect to asset quality woes. They expect a slippage ratio to be around 1.6% between FY22 to 25. So they expect PSU Banks to report a strong earnings momentum, a CAGR of around 23% over the next few years, with ROAs close to touching about 0.9%. So they have initiated coverage on the likes of Canara Bank and Indian Bank, while across their coverage universe in terms of PSU Banks, they have an outperformance rating. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's the entire PSU banking lot, which was higher today. But let's move on to the fifth story this evening. WeMart gained over 1% after the company's management told CNBC-TV18 that the company has bought LimeRoad. Manglam Malu is here with the key highlights of that conversation. Manglam.
Well, WeMart was in focus in today's trading session. That's primarily because they've gone ahead and bought the online pure play fashion brand LimeRoad for about 67 odd crore rupees, which includes, of course, the upfront cash that they're paying, a little over 30 crores, and the liabilities that they're assuming as well. WeMart had initially invested or planned to invest about 100 crores over the next few years to build up their omni-channel presence itself, and this was a step in that direction also. And additionally, they plan to invest around another 60 to 70 odd crores in this business over the next couple of years to scale this business up from about 10%, less than 10% of their sales online currently, to about over 20% over the next 24 to 36 odd months. Importantly, there are a lot of synergies between the two businesses as well. LimeRoad has a strong customer base in UP, and WeMart has a large proportion of their stores in UP as well. So synergies there. 70% of WeMart's customers and 65% of LimeRoad's customers are non-metro tier 1 customers. So in the deeper ends of the country, these are strong brands. And secondly, 30% of the SKUs or stock keeping units sold by LimeRoad are sub 499 odd rupees, and this compares with WeMart's 56% customer base or SKUs being sold sub 500 odd rupees as well. So as a result of which, while LimeRoad sales have been falling from pre-COVID peaks of over 600 odd crores to about 170 crores, 180 crores in FY20 to just about 69 crores in FY22, we believe that WeMart's scalability could increase it further. And WeMart's management himself said to CNBC-TV18 that from about 10 crores per month, this business can go all the way up to 50 crores over the next 12 months itself. And while it is making small losses, it will turn EBITDA positive over the next 2 years as well.
This is definitely a very good acquisition that we have had, and this is a great team. LimeRoad, which was run by Suchi, so she's the founder, Suchi Mukherjee. Slowly and gradually, this millennial crowd is definitely going to acquire more and more digitalization, and that's where we are getting prepared for, and that is why we took up this opportunity. And this is a great team which has a great technology, and we could really build onto that. But yeah, as far as revenue is concerned, they had a very good peak pre-COVID, and post-COVID, they have gone a little bit down, and they have suffered. But as of now, it has a 10 crore plus run rate per month. But yeah, I think we will definitely scale it up immediately within the next 12 months to the pre-COVID levels. There is a loss which is small right now, but I think we could, with the expertise at WeMart, the product expertise at WeMart, the qualities that we can offer, and the kind of deliveries that we could offer from our stores, which are 410 doors as of now, where the customer delivery could be much cheaper and much faster. That's the opportunity that we'll try to use and make this system efficient. And that's the real omni piece which will come in and could become efficient and profitable in the next 2 years.
Okay, so that's on WeMart, but there were a whole host of pharma stocks which were in focus today. I'll start with Aster DM from the entire hospital space. That stock was in focus as Aster Pharmacy is basically they are going to be entering Saudi Arabia and starting pharmacies within that space. So they have formed a joint venture. They will be establishing, managing and operating pharmacy chains across Saudi Arabia. The company will market and commercialize pharma products under the Aster Pharmacy brand. So that they will start with around 250 plus stores in the next 5 odd years. And phase 2 will also include setting up a pharma manufacturing zone in Saudi. So that's a positive for Aster DM. That stock was higher by around 3% odd. RPG Life reacted to its numbers where revenue was at around 135 odd crores. Margins were maintained on a year-on-year basis, and profit came in at close to around 20 odd crores, which was a growth versus 15.75 crores year-on-year. And Q-on-Q as well, 135 crores versus 129 crores on a Q-on-Q basis. Margins maintained again sequentially and a higher profitability on a sequential basis. Gland Pharma was in focus because Morgan Stanley wrote on it. They have an overweight with a target price of 2478. They say that the company has entrenched its presence in a difficult injectable category, and the capital efficient business model is something that Morgan Stanley likes. They initiated coverage on Gland Pharma, and they expect around a 22% EPS CAGR. And lastly, Alembic was in focus because the US FDA inspected their oncology injectable formulation facility. They issued them 4 observations to this particular plant. The company, however, said that the observations are procedural, no data integrity issues, and the observations are addressable. So these were a couple of stocks which were in focus from the entire pharma and healthcare space. But let's move on then. Adani Transmission rallied over 6% after its second quarter operational update. Vivek Iyer is here with the details.
Well, that's right. So Adani Transmission actually went ahead and gave an operational update for the quarter gone by to the exchanges. So now when you're looking at the internal of this particular update, it's quite a strong operational performance that the company has managed to deliver. Now remember, the company operates both in the transmission as well as the distribution segment. And when you're talking about the transmission business, the operated transmission lines were northwards of 99.7%, so a strong number coming in there. Very interestingly, when you're talking about the distribution business, the distribution utility business actually has gone up almost 13% on a year-on-year basis, so another strong number coming in there. And more importantly, when you're talking about the distribution loss, which a lot of the distribution companies actually face, Adani has actually managed to go ahead and reduce or minimize this particular loss to around 6% in Q2 FY23 versus 7.6% last year around. So on the back of these improved metrics, you're actually seeing the stock do quite well in today's trading session.
Okay, all right, Vivek, thanks very much for that. Canfin Homes, in fact, rallied around 3 to 4% after it delivered its second quarter numbers. Abhishek Kothari is here with the details.
Well, it was a mixed set of numbers coming in from Canfin Homes. The standard asset provision was at 33.5 crore. This is suggesting that they might have made provisions on SMA 1 and 2 accounts, given the fact that, it's much higher than what the loan growth has been. So net interest margin has declined to 3.55% when compared to 3.6% in the previous quarter. This is on the back of the fact that, non-salaried segment has grown faster than the salaried segment. Tax payment was at 30.1% when compared to a little under 26% in the previous quarter. AUM growth has remained healthy at 22.2% YOY and about 4.7% sequentially. However, operating profits were weak as they grew by just 0.5% on a quarter-on-quarter basis. Provision coverage ratio has declined sharply to about 43.4% when compared to 54.4% in the previous quarter. So NI was a beat on our poll. However, profits have come a little below our poll. So brokerages have a mixed view on the stock. Jefferies have a buy recommendation with a target price of 750 per share, while on the other hand, Investec has a hold rating with a target price of 625 per share. Back to you.
Margins will be maintaining at around 3.5% in coming days, and spread will be at around 2.5%. Disbursement generally happens during third and fourth quarter, and we are in line with our projections. So I think third and fourth quarter will be disbursing as we have done in past, and so disbursement will be quite good during third and fourth quarter.
Okay, well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.